Yeah, good morning, everyone. So yesterday we saw Indian market correcting substantially, and that followed even by the US market that corrected a lot yesterday. In fact, it was Dow was down at one point of time by around 1100 point. But the key thing is to watch is that the in the US the market recovered fully and ended positive. So that was more of a surprising move which was seen in the US market. And though the decline was attached with the news of Ukraine and Russia, wherein Russia can uh, take control of Ukraine, and US and the European country will put up a lot of sanctions on that, and also Fed meeting. But the recovery, what we feel is more of a like a, the things which is playing out is that there is a lot of retail participation both in India and the US, and these are more driven by the short-term events and all, and there is a lot of algo trading which is going on in the US. So all these has such a large volatility. We were consistently saying that the US market is seeing some softness in the results, and we are seeing profit booking over there. So when such type of things happens, like there is a 1,000 point down and all, or here in India also we saw substantial down yesterday. So more of a situation of capitulation type of things were happening. So generally, market bottom in these type of scenario where a lot of selling comes and then there is a smart buy come at the bottom. So hopeful of market stabilizing in few days and may take some breather here. Today morning, futures of the US market are down, and Asian markets are down more. If we compare, India was down a lot as compared to Asian markets, and today Asian markets are down more at around 1.5 to 2%. So quite possible we may not go down that much as is the case with other Asian markets. In commodity, oil is seeing some softness from yesterday. It is at around 86.95, but it's still quite strong if you compare it with any other market. Even commodities are not giving any breakdown situations or something. They are down softly. Means aluminum is flat. Copper is down by around 1.7%. Iron ore is down by around 1%, and steel is flat. So now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, as sir said, even the Asian markets are trading on a downside. We are likely to open with a gap down by almost 100 150 points on a downside. Probably, we'll start up the market by at around 17,000 psychological level. So that will be the crucial support level for the Nifty. Any move below that will extend this selling pressure and likely to test the level of 16,800 to 16,900 levels. The major support will lies for the Nifty at around 16,600, which is the support provided by the 200 DMA. So up to that level, we can expect that the selling pressure is likely to be witnessed up to 16,600. But for today intraday purpose, 16,800 will act as a immediate support level on the Nifty side. Whereas on the higher side, 17,100, 17,200 will be the crucial resistance zone. If the Nifty manages to maintain a positive closing about that level, then only we can witness some sort of a pullback rally, which might take a Nifty towards 17,400. But at the current level, we don't expect a strong pullback rally, but definitely the selling pressure is likely to be extended for coming 1 to 2 days. Probably at around 16,800 to 16,600 levels in that support zone, Nifty may get stabilized, then we can think of taking a long positions. But at the current level, we will try to we will try to avoid the long positions at the current level. Coming towards the bank Nifty, yesterday we have seen that the bank Nifty somehow manages to maintain a closing above the 50 days moving average, which comes to at around near about 37,000 levels. So for the today intraday purpose, the major support is placed at 36,500. If break that level, then 36,100 and 36,000 levels can be seen on the downsides. If it's break at 30,000, 36,000 psychological level, 36,200 levels, then major selling pressure can be seen into the bank nifty. Whereas on higher side, 37,200, 37,400 level will act as a crucial resistance level for the bank nifty. Coming towards the nifty finance, for the today intraday purpose, the support is placed at 17,300 and 17,200. Whereas on higher side, 17,550 will be the first resistance level. Any move above that level may extend some pullback rally towards 17,700, 17,800 levels on the higher side. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. See, even yesterday we had said, if 17,500 is broken, 17,000 was the next real support area, and that is where actually Nifty came. We were not expecting a 500-point move in a day, but that is where it came. And now see, there are 2-3 points in the data. Firstly, the negative thing is, unfortunately, as I said, the VIX has come up above the 20 levels, and it is likely to stay here for some time. Maybe it can come down to, it has come up to 22 now. It can come down to 20 or 19 and then again, shoot up. So it is here to stay around the 22, in between 20 to 25 levels. Secondly, the base has shifted lower from 17,000 to 16,500 levels. Now 17,000 was the highest open interest built up yesterday. So base has been shifted lower from the last 3 or 4 days, from 18,000 to 17,500 to 17 and now to 16,500 levels. So that is one negative sign. But now coming to the positives, yesterday near the lows, a lot of open interest has been built up in the index. So 17,000 is a strong support. We saw Nifty bouncing twice from 17,500. Now it is likely to bounce again from 17,000 today. Open interest has gone up, which is good. PCR has come down to 0.65 odd level, so it is extremely oversold. So this is also a good sign. So for today, we expect a bounce. Just like Dow bounced majorly from lows, we are expecting Nifty to bounce from somewhere between 17,000 and 16,900 odd levels. So definitely we believe, for intraday purpose, you can buy. But if Nifty comes up to 17,200 to 5,300 odd levels, it is an opportunity to sell stocks which have gone up. We still continue to hold a negative stance going forward, but at this point of time, for the next 2 or 3 days, probably till expiry, you might witness some bounce. So it is a good opportunity to sell some stocks, because overall we believe 16,500 should be retested. So that is what it is. From the stock specific front, everything was in red yesterday, so not much in the green. But yeah, some select banking names like Bandhan Bank were in the green. A little bit of buying was seen in the pharma space like Cipla and Lupin. So also good recovery was seen in some of the other banks like Axis Bank, and ONGC continued to remain strong. So these are some pockets where you saw good buying, but overall everything was in red. The IT sector looks very weak at this point of time. There has been bearish engulf in most of the stocks in the IT space, and very likely and open interest is the major concern here, because see, in this rollover of January, from December to January, lot of profit booking was seen, and you have not seen much long. In fact, shorts have been seen. So we are likely to witness further selling in IT. So we can probably see another 5, 7, 10% cuts in some of the stocks. Infosys, TCS, Tech Mahindra, from the large cap space look weak, while mid cap IT names have witnessed already huge amount of selling. So unlikely to witness more, but now probably the large caps will see more selling. That's it from my side. I'd like to have the fundamental team to take over this.
Good morning. Tube Investments of India has announced that it has set up a new subsidiary. It will focus on EVs, and it will also include the electric three-wheeler venture that they had started recently. It will infuse a capital of 350 crores initially, and this subsidiary will be acquiring a company by the name of Celestial E-Mobility with an investment of 160 crores. This company is into electric tractors. So overall, this news is positive for Tube Investment. Axis Bank result is above expectation. Credit cost was lower than expectations and at a multi-year lows of 0.8%. Loan growth accelerated to a 4-year high of 17%, and quarter-on-quarter growth was also healthy at 7%. Slippage ratio declined from 3.5 to 2.5%. While the reduction looks good, but when we compare it with HDFC's 1.5 and ICICI's 2%, Axis is 2.5% seems on a bit on higher side. But overall, looking at encouraging signs on credit cost and loan growth acceleration, we change our view from earlier neutral to positive now, and stock should do well. HDFC AMC result was below expectation. The market share loss continues every quarter. It keeps losing almost 40 to 50 basis points market share, which has now come down to almost 12% from around 15.5% 2 years back. Yeah, its AUM grew by just 1.9% quarter on quarter against industry growth of 5.5%. To stop this underperformance and market share loss, company has hired new fund managers in last few quarters and also introduced new funds including multi-cap, thematic, and many new ETFs also. But we will first need to see at least 1 quarter of stabilization or a slight increase in market share before turning a positive view. So we remain negative over here. IIFL Securities, the broking company, result was okay. Core fee and commission revenue increased by 6% quarter on quarter against 8% for ICICI Securities and much higher for Angel at 14%. So we are neutral over here. SBI Card's result was in line. Company maintained market share at 19%. Revenue growth was healthy at 26% because of good festive season card spends. Credit cost remained high at 9.5%. However, most of the pain in asset quality is behind now. Restructured book also declined well and is now at 2% versus 4% last quarter. Gross NPA also has come down to 2.4%, which is back to where it was in the pre-COVID era. And we expect remaining stress to come out in Q4 and from FY23 first quarter onwards, things should be back on track how they were before COVID. And overall, there is just one pending overhang on the company about the potential RBI regulation on credit card MDR charges, which will reduce their profitability whenever it comes. But that is largely factored into the stock price, which has underperformed in last couple of months. So from a long-term perspective, we are positive over here. Shriram Transport Finance result was in line. Operating performance was good. However, credit cost came in much higher at 3.3% against estimate of 2.5%. Company has made some excess provision because of the new guidelines of RBI on asset classification. Because of that, also GNPA increased from 7.4 to 8.4%. But if we ignore this RBI change in RBI norm, which is likely to come up, then the result was in line with expectation. So we are positive from long-term point of view. Thank you.
Good morning, everyone. Deepak Nitrite came out with results, and results were below expectations, mainly on account of the margins, which have declined to 20% versus expectation of 24.5%. The decline was across the segments. So the stock is showing 28 times FY23. We expect negative reaction in today's trade on the basis of these numbers. Burger King came out with the results, and results were broadly in line with the expectations. The company saw EBITDA margins of around 11.7 versus expectation of 12.9. The company has already also done 20 restaurants opening during this quarter, and then total count now stands at 294, and it maintained its long-term guidance of around 700 restaurants by December 26. So this is we feel this is broadly in line with the overall street expectation. Sudarshan Chemicals announced their results, and results were in line with the expectations. Sales grew by 19% YOY, and EBITDA margins also came at 11.7% versus expectation of 12.7. The stock is trading 21 times, though these are in line with the expectations, but considering the market setup, we believe this could be muted in today's trade. Sarah Sanitaryware announced the results, and results were above expectations. Sales grew by 28% YOY. However, margins were much ahead of the expectations at 16.5 versus expectation of 14.7. So this is good numbers, but however, these numbers came during market hours, so reaction has already been there in the stock price. Thank you.
Good morning, everyone. Zenser Technologies has provided in line with expectation set of numbers for the quarter, with dollar revenue coming in at 147 million versus expectation of 146.9 million. Even EBITDA margins came in line with expectations. Stock is trading at 19 times FY23 EPS. India Mart has provided with its number yesterday. The company has posted below expectation numbers both on the revenue and the margin front. Deferred revenue came at rupees 790 crores versus QOQ of 756 crores. Stock is trading at 44.8 times FY23 EPS. Thank you.
Good morning. Ramco Cement posted below expectation numbers. Though volume came above expectation, it was completely offset by lower realization, which came at 5146 per ton versus expectation of 5330 per ton. Volume was majorly impacted in the south due to extended monsoons in Tamil Nadu and higher COVID cases in Kerala. And to counter this lower volume, the company had increased its dispatches in the east, which is comparatively less remunerative market for the company. Operating cost for the quarter was highest ever for the company. Power and fuel costs rose sharply by 31% quarter on quarter, which the company was not able to pass it on to the end consumers due to weaker demand. Also, the low cost coal inventory which the company used in the second quarter was exhausted, which resulted in higher costs and lower EBITDA. EBITDA per ton came at 746 per ton versus expectation of 1176 per ton. However, demand has bounced back in the current month, and the company has taken price hike of rupees 15 to 20 in the south and rupees 40 per bag in West Bengal. But whether these prices will sustain or not will only be known in the first week of Feb. However, the management believes that the current inflationary environment is over and some moderation in costs will be visible in next 1 to 2 quarters. The share is trading at EV by EBITDA of 12.8 times FY23 EBITDA. Kirloskar Ferrous industry result was declining on both revenue and EBITDA front. Margins came at 14.7% versus 19.4% quarter on quarter. The company has also declared interim dividend of 2.5 per share for FY22, and the record date for the same is 4th Feb. Apollo Tricoat Tubes result was declining as well, though revenue increased by 20% quarter on quarter. EBITDA per ton came at 8,000 per ton versus 8,172 per ton quarter on quarter. Margins have also fallen to 6% versus 8.3% quarter on quarter. Thank you.
Sir? Sunil sir, are you there?
Yeah, now results for 29th. Amber Enterprise is likely to report numbers, and numbers are likely to show improvement. Revenue is likely to grow by around 30% year on year, and EBITDA is likely to show improvement quarter on quarter from 5.8% to 7.3%. Though normalized margins are at over 8%, so it's still some time to reach to their normal margin of 8%. But quarter on quarter, there will be some improvement in Amber Enterprises. MCX is likely to report numbers, and revenue is likely to grow by around 16% quarter on quarter, and EBITDA margin is also likely to improve and are likely to grow by around 36% quarter on quarter. So the results is likely to show improvement. NTPC is likely to show again improved set of numbers with revenue growing by around 17% year on year, and EBITDA margins are likely to improve quarter on quarter, but year on year likely to still remain lower as compared to 30%. Companies likely to report around 28.5%. EBITDA is likely to show improvement of around 12% year on year. Then Rossari Biotech is likely to report more of a okay set of numbers, wherein quarter on quarter revenue is likely to grow by around 9%, and EBITDA margin is likely to improve from 11.4% to 12.6%, but is still lower as compared to their normalized margin of around 15.5 to 16%. So most of the chemical companies are showing some improvement from last quarter, but still remaining lower than their normalized margin, mainly on account of the increase in the input cost. Then and IDFC First is likely to report number that will be more of a flattish type of number. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.